Hi everyone, it's Stuart here. It's Friday, the 19th of December. So, last full trading week of the year is coming to an end in the next few hours. Look, I'm busy day yesterday with the Bank of England, the Bank of Japan overnight, ECB yesterday as well. And obviously, that big surprise in the headline inflation number that came down to 2.7%, core at 2.6%. Down. We'll see what that looks like. It's saying I've lost the connection. So hopefully you can hear me. Is anybody here can say hello? You can hear me. It looks like it's back. It was a bit of a glitch as I started, I think. Let's let's just make myself a wee bit smaller. Actually, it's better. I like it there better. Actually, it's from there. The screen's bigger, isn't it? There we are. The screen's bigger, and I'm just a small. So this is the gold market. Our stop loss is now from last night was pulled up to 4309. You know, we've been long here from 4,227. It's nicely well in the money. Went high. Get within a smidge of getting stopped out last night, but we moved that after that to spike into that zone area. So we're trading at 433 at the moment. Obviously, the big news overnight was the Bank of Japan, as expected, moving rates to a 30-year high. 30-year high, and that's how long and moribund really the Japanese economy has been. They've tried all sorts of things. Remember, Mr. Abe, poor old Mr. Abe, who was assassinated in the end. A shocking incident. Tried, his arrows to stimulate the economy. It was working a wee bit, but it's just ruptured down, and we remain relatively moribund in Japan. Obviously, wage structures are quite fixed. Job negotiations or wage negotiations are quite fixed. Takes a long time to change things in Japan, and it hasn't really happened. But we've had now Udea, the first central banker in a generation or over a generation to actually raise rates. So it's still under 1%, 0.715% is the overall lending policy from the central bank to Japanese banks as of this morning. The policy statement and the press conference from Mr. Udea later on in the morning, earlier in European time, he was very much. Sorry, I'm looking at the camera. He was very much of the idea that this could be the first of a rate hike cycle. So as everybody else is looking to cut rates, Japan is moving rates up. Pressure in Europe, potentially. They didn't mention it yesterday. Didn't really talk about very much yesterday, did they? In Miss Lagarde's press conference about raising rates or not raising rates. As they were, she was very bullish about the state of the European economy. So at the moment for Europe, the expectation is that they won't have to do anything rate-wise 2026. That in itself is a negotiation for central bankers. But there's chatter that they may need to raise rates. Obviously, New Zealand, I'm saying obviously, I've got to stop using that word. New Zealand also chattered there that they may have to raise rates, and even Australia as well. Currently at 3.6%, possible, going in the opposite direction there as well. But, obviously anything could happen. And the year is full of unprecedented events. So event of the morning, clearly this big move for the Bank of Japan and the Japanese people. So savers getting very excited in Japan. If we look at if you pull that away, if we look at the Japanese yen done this morning, it's I'm on the CAD because we've got some CAD retail sales figures coming. I think I call it CPI. CPI was already out early in the week. But if you look at the CAD this morning, the yen this morning, dollar yen, 157.35 now. It's come down from its highs, but not much. We rallied significantly. Remember what this was? This is a daily trend line from the going all the way back to the top here back in November. This blue big thick line there, and we rallied, smashed through it this morning. 56.70, 56.80 was sort of a stalling area here back in the beginning of December, and we've rallied through that as well. So 57.40 has been our top this morning, and we're still holding at high. So even a weak dollar has significantly moved against the weakening yen. Big move for the yen this morning. Sterling 221. So the guppy is over 210 this morning. And again, if we look, we could. Well, I think it's off the scale, because I don't think this chart goes back not long enough. No, it doesn't. It only goes back to 2020. But you can see the last 5 years, it's been in this upper half of that Bollinger Band. This is the monthly chart for pound against the yen. Yen weakening significantly, as you can see here, during the second half of 2025, above 2024's weak zone here. At 203 over the key psychological 200 level against sterling. So 210, not seen these levels again for about, I think it's 15-year high here, pound yen. And all the same across, we leave the monthly charts on here. So the Aussie yen, not quite as historically high, but we're at 104 this morning. And again, a strong move this second half of 2025. CAD, well, actually, let's go to the euro. Even stronger move, all-time highs again. European currency against the yen here. Very strong move from most of the year. From this is the big March candle where the initial movement happened, but the big candle there in June, and since then we've just moved higher and higher. So 184.20. For euro this morning. So despite the Bank of Japan raising rates, the yen has weakened. Yields, particularly at the long end of JGBs, have rattled. And if we look at the Nikkei, remember we were the Nikkei. This closed the week at 49,460. So that's the week. Let's just go to the daily candle. Closed the day bouncing back up here at 49,950. So the yen's weakened, and as the yen has weakened, the stock markets have rallied. So potentially more to come in 2026. More asset bubbles potentially in Japanese stocks, but some stock pickers certainly looking at Japan as well as wider Asia into 2026. So a big up day today, thanks to the Bank of Japan. We did have overnight. We did have some triggers on euro, pound, and pound, euro yen and pound yen, and I think it was Swissy and CAD yen as well, all triggered to go against the yen all long. I didn't take any of them because of the risk of them not actually moving, or some negative, some dovish comment coming out. But it was all very hawkish this morning, and the yen has tanked. And the stock markets in Japan have moved higher. Look at the hourly chart. See the reaction to the data this morning. There's the European Open, and that was following Udia's press conference. The data was released there at the 2:30 into the 3 o'clock candle. So, and it's moved higher as the European traders came in this morning. So Nikkei still shy of 50,000, where we shorted it earlier in the week. And obviously reversed to our stop loss yesterday, but 49,950 or 946 at the moment. Obviously, markets well and truly closed, well and truly into the weekend, late into early Saturday morning now in Tokyo and Japan. So significant move in those crosses, the yen crosses. CAD data is about to drop. I think I put on the heading it was CPI. CPI was out earlier in the week, and like the UK CPI, it was not surprised, but it was weaker than expected. We've got actually it's core retail sales. So remember we had the surprise for US retail sales better than expected yesterday, but that was the day before. That was all, but that was to do with perhaps the calculation and when the collection and the data was collected due to the government shutdown. So capturing particularly for the CPI yesterday, capturing the discounting that goes on around Black Friday. So as I said in our video this morning, we have the cleaner data for December, which we'll see in the new year. So markets sort of just taking that with a pinch of salt, which makes absolute sense. So obviously we haven't got this government shutdown issue with in Canada or elsewhere in the world. So clean data for retail sales. Not much expected from the data. Flat decline to no growth, both on the core and the retail sales numbers. It's obviously for the month of November. See how that comes in a minute. But basically, the CAD, certainly against the dollar, if we just put the CAD in here, dollar CAD continues to hold its gains, or it has today so far. So the CAD's moved down this morning, dollar CAD's moved up, and we've just turned around in the last hour or so, topped out at 138. So we did get to 130. Did we get to 130? Yeah, just about 138 finally this week. And now, but we've turned around, some profit taking on that. If we look at the attack of, as we've been talking about this all week, the attack of 138, still quite channel bound on the 4-hour chart. Daily chart similarly channel bound this week, and 138 being the resistance. And so we had a big up day on Wednesday, down day yesterday, and back to 138, but we're selling off currently, although we're up for the day. So see if there's any impact on this pair if the retail sales suggests weakness. That's been long from there, got to target 1 and then reversed quite aggressively here in the 5 minutes running into the data. So that was long, and then target 1 that's stopped out, and that might be looking to go long again, but we need this to recross using this strategy. But obviously can be impacted by the data that's about to drop dollar CAD. So biggest mover today has been the Japanese yen, unsurprisingly. I think the yen's percentage wise, the biggest mover has been the dollar yen, which is up 1.15%. Euro yen 1%, pound yen 1%, just over 1%, Aussie yen 1%, CAD yen 1%, the three biggest moves. So down over 1%, the Japanese yen today, following, even though the central bank upped its rates for the first time in 30 years. The outlook has been as the result of the statement and Udia's press conference means that there's been more selling of the yen, counter to what you think. So the expectations, all of this was priced in already, that they were going to raise rates. So the expectations is perhaps the likelihood of further rates, because of the political pressure more than anything, may not happen. However, the rhetoric has been the other way around. So a bit of a mixed noise there coming from Tokyo. So it looks like that data may have dropped 131. There we are. Dollar was up against the CAD. It's sort of moving around. Let's have a look at that. How significant it is. Whether it's worth getting on issue about. Sorry, I was looking at something else there. Let's bring the calendar back. See what's happened. So retail sales in the UK was weak, and that is a weak reading as well, and -2 for the headline. So -2 for November of 1% from 0 expected. Last month was also downgraded from -0.7 of 1% to -0.9 of 1%. The core was also downgraded to 0.1 of 1% negative from 0.2 of 1% positive. So that's a 0.3 variance, more than the headline, and core has come in significantly worse than expected, negative 0.6 of 1% compared to a flat 0 reading. So that should weigh on the Canadian dollar, one would think, or it's an interpretation of that immediate headline number there. And dollar's sort of moving Actually, let's go down in a minute, see how it reacted to the number. So yeah, there we are. There's the data coming out. CAD's weakened immediately, and it's given a little bit back in a couple of minutes since, but the move down up for the CAD ahead of the data has been sold off. So this is a non-position to take there on that. So that's the main data of the day. We have got some US data later on, which is new. I think it's new home sales, isn't it, to round out the week. Existing home sales, not new home sales, and consumer sentiment from the University of Michigan in an hour and a half to finish off the data for a very busy week. It's obviously dominated by the central banks and that big US CPI, the non-farm payroll earlier in the week. But all of it, with big caveats with regard to the lockdown and the impact on the counting, basically was what this is, how accurate it's been given the amount of people that were doing it, the weeks where it was the new counting was taking place. Trump has another pitch at the economy again late tonight. He had one the other night. The other big news overnight is this story around ByteDance and TikTok. It's been going on for months and months, and some sort of, again, it's a big headline release. The devil will be in the detail as ever about how much scrutiny the US will have over this new trading company, the TikTok, registered in the US. So we'll still see. Again, those of you that obviously US users, big TikTok users, under pressure of losing that. But Trump doesn't want that. He wants control by a US company or a new created company. So again, see what that looks like as the actual detail rolls out. Very good at headlines, isn't he? But the detail is always the thing that really moves markets, really, not the headline, even when Trump fires from the hip. So where are we this week? Well, we are where we were, really. As far as the Forex market is concerned, the dollar remains under pressure, not perhaps as much under pressure as Bitcoin and other assets, but so I'll come to that in a minute. But really, the trend is still set 117.59 euro at the moment. But if we look at the this week and going into the second half of December, remember there's still 2 weeks of trading of December to go, and some of the best trading days of the year for stock markets occur in these next 2 weeks. So obviously, a lot of people shut down. Particularly here in the western parts of the world, but dollar remains under pressure. It's had a better week, quite a volatile week as far as the euro is concerned. 118 earlier in the week on Tuesday. We're down to 117.15. So it's even though it's moved quite significantly, it hasn't overall on an end of day basis. It topped at 117.52, and that really is the key resistance on this move, this leg up. You could probably argue now from a fib point of view that leg is over. We've been down 4 days this week, but the bodies of the candles, it would still question it. So if you're looking for a sort of a resumption or where we might stall, if we first call, we've already been to the 23 fib level. The next one is the 38. There starts to become important. Sits around 117. So 117. As we've been saying for a long time, was a resistance area to the upside, is now our key support area. So 117.16 at the moment. So it's probably a little bit too presumptuous to put that fib on, but you can see next week perhaps we'll go into this 117, 116.85 zone. So that would be an area to watch as we go into next week for the euro to the downside. So this is an immediate area given what may or may not come. Next is the 50 of this leg, and it also coincides with the 20-day moving average. So that's the next zone, 116.50. Unsurprisingly, it's hanging around these round numbers. So 117 and 116.50 areas to look to the downside next week for the euro. To the upside, we'd like to close above the this week's high, which takes us through here at 117.60. And then that intraday spike took us obviously to 118. So there's our upside targets and our downside target potential range for next week. It's very unlikely to, I'm saying that, that range is very unlikely to be hit next week, given that it is, I might regret saying that, obviously, given that it is Christmas week. But, lower volumes, lower liquidity, some juniors in charge, not many decision makers around, and that's when accidents can happen. But so, they're legitimate levels for the euro going into next week. So basically, we're still biased to the upside, even though we've rolled over. Big 20-day supporters all the way down at 160, and this is the same for all the dollar crosses saves the yen. Let's go to the yen next, because that's perhaps realigned things. So we've got this. So this down daily trend line we had that was still legitimized from the top we'd seen here at the 20th of November, and this flat floor, this big support area we talked about earlier in the week, under 156. Obviously, the Bank of Japan decision has sort of broken that. So we've broken out of this falling wedge. So and obviously can't decide anything until this day is complete. But just even if we give back some of or even most of what we've seen today, it'll be a very interesting bodied candle, and likely to still be above this trend line to the downside. So we're currently at 157.35. So that obviously the big round number has been this high here from the beginning of December, the 10th, the 9th, and the 10th, which took us to this 157.15. So you translate that to a big whole number, and the breach of the of this downtrend line. So 157 is the support area. We're only 35 pips above it at the moment, but we are pushing to the high. So 157 is a big support zone. Then the 20-day moving average, which sits at 155. Let's do the same as we did with the others as we go next week. So the big support really is that that zone there, that 155. Sorry, where are we? There, 155.85. So below 156, but first support is 157 through here. Sorry, and so see if we come back to test this 56 zone, and then if we weaken significantly, some weakening of the dollar continues in a bid for the yen into this support zone from this week, and this resistance area back from the beginning of November, and a box area we had at the middle of November. So this 154.50 zone here. So they're the three areas you want to be looking for to the upside. Above these new highs is obviously 158, and then that brings in the hugely psychological 160, which we didn't get to earlier in the. Just put that on for 160 there. There may be some realignment or some intervention from the Bank of Japan, perhaps a surprise move lower. Who knows? If we just go up to the weekly chart here, you can see we're around. There's the 160 we didn't get to last time here at the end of last year. That's the next resistance, but you can see why that down trend line was so key on that 20th of November, because we ran into this weekly resistance area there at 157.70. So again, to the upside is this zone through here. That top zone becomes key as well, as it's a weekly cluster from here this time a year ago. Okay, when everybody again, this time last year we were expecting a smash to 160, and it was an area we'd been to in the summertime. We didn't get there, so the highs suddenly moved down, and we moved down quite aggressively as the dollar weakened. Yen's then since weakened for the second half of 2025, and the trend has continued and remained up in this upper half of the Bollinger Band. Although here you can see on the weekly we've sort of come in from the extremes, so They're the levels to watch for those final 2 weeks as we go into 2026 for dollar yen traders. That's all a bit messy now, isn't it? Let me just realign that. There we are. So that one to watch, 57.78 and 158. So sterling, it's had its own worries, but again consolidating at highs, and that's starting to extend now. So we haven't wanted to get over 134 very much on an end of day basis. And so we've been consolidating for 1, 2, 3, 4, 5, 6, 7, 8 sessions above literally where we're sitting now, above 133.70. So it's looking a bit weaker. The stochastics here have already turned down on the down day we had on Wednesday following the surprise inflation, both in the UK and the US. Sorry, that was the UK one. The US one yesterday lifted it, but then we've finished flat again. So this break could be quite significant when it happens, but looking like more consolidation. So going into next week, our top from this week took us to 134.50 zone. Our support, as you can see here on the daily basis, very much 133.70. And then the next level happens to be the following the big candle from the 10th, which is also now the 20-day. So that's the next. Sorry, I was painting it on the other ones, wasn't I? So that's the support level next week, 132.97, which is obviously 133. The upside is this 134.50 zone. And that's our range. We'll be looking at for next week. And again, as I say, because of the restricted trading, restricted volumes, restricted liquidity, these wider ranges are unlikely to be tested, but don't rule them out next week. Aussie, really well bid, 66.85. We'd got to. It's been a down week overall this week for the Aussie, but 66 breached a little bit on Wednesday. More yesterday, but we finished quite strongly. We finished at 66.10. We had got to 66.30 again yesterday, and we're at 60, just literally 66. So you don't need me to redraw that. You can see the range for the Aussie. 66.85 is the up, and 66 big support. The 20th day here is coming up to support that area. That would add some support that. But if that breaches, you can see there's lots of fresh air that will take this quite quickly, potentially down at 65. As we got quickly to 66 and then on to 66.80. So very, very strong run this first half of December and end of November, first half of December. But last week or so, we've given back some of those gains, but we are still holding 66. So again, bang, bang. We talked all about this last week, didn't we? So Aussie's had a really good run. It's turned down a wee bit. What will you be looking for next week is a breach of 60 and obviously the key 20-day moving hours. But again, a lot of fresh air. So if that breaches next week, that bottom of that candle, that zone there then comes into play, which is basically 60, 65, 50, isn't it? So they're the Aussie zone. Should I draw that as well? Why not? Let's be consistent, even though it's already on there. So that's our major support. That's 50 pips lower at 65.50. And our top at the 66.70, 66.80. Whoops, it's dropped off. 66.80 top to the upside. So that's our Aussie range. Kiwi, similar pattern to the Aussie, not as aggressive to the downside, but it was 58, not 66 in play. And today, the weakness of the Kiwi has been extended because we've now gone through the 20-day moving average. So watch that. That may be some more action on that next week. Probably more into play about the RBNZ into play, but you can see a very quite a burst through 58. Looked like this was all looking good, but then we've come back relatively quickly, but with small-bodied candles. So it's today that's been the leg lower. So Kiwi getting sold off today. Next support, it was basically here, isn't it? We're through here, so. Kiwi, watch that next week, 57.20, and then obviously 57, that whole 20 pip. In fact, that whole range there, that 20 pip range is key as a support for the Kiwi, and then down sort of through there. I would say next week, the bottom of the Bollinger Band at 56.50. Upside is obviously the 58 range, which looks like that's a goner for the way that we've come down from that over the last 5 days. So that's Kiwi ranges to watch for next week. Which one haven't we done? We haven't done. Did we do CAD? I don't know. We did do CAD. No, we didn't do CAD. So dollar remains quite weak. Big fat floor, as we talked about yesterday, 137.50 this week and last week for the Canadian. So watch that to the downside. We have ticked up a bit, more to do with weakness in the Canadian dollar rather than bidding and a combination of a bit of weak strength in the dollar, but we're still way below our 20-day. So net upside next week would be initially there, 38.50, and then the 20-day is coming down under 139. So 139 is here, there. So that's the upside areas. Downside, obviously, we're closer to that. Test that breaks, and then that breaks. It brings in this 37.26, which was that intraday. These triple low areas we talked about. We've talked about a few times, haven't we? And we tested this week as well. So it's a key buying area there, 137.30 zone for dollar CAD going into next week. And Swissy, 79.50. So we're still under the key 80 area. We're still sort of, very much sort of range bound through here and pivoting through 80. I don't know how many of you trade the Swissy, but it's in play. So buying around the bottom here. Didn't draw that very well, did I? Buying around the bottom here at 79, pivoting through 80, and the top we just can't get over 80, 85. We didn't get to 81 in this range we've had for October since October basically. So, but we've had a stellar year overall for dollar. For the Swiss franc against the dollar, and we are sort of consolidating through that big fat wide range. That's a bit messy now, isn't it? But you can see we're still at the bottom end, so we still have some more pressure to test that to the downside. So there's the Swissy. So basically, the story hasn't changed. The dollar remains pressured. Expectations of at least 2 rate cuts for 2026 from the Fed. A more dovish leader of the Fed, certainly more in tune with what the political masters, Mr. Trump, President Trump, wants. But obviously, they're still. But as far as the markets are concerned, as far as the wider Fed members are concerned, the independence of the Fed is sacrosanct. Or has been, but things that were sacrosanct have been chucked out of the window by this president, haven't they? So let's see what 2026 brings. Obviously, it gets much more political next year, even though we've had a crazy first 12 months of the second phase of the Trump era, dominated by war, conflict, and obviously the tariffs. Will he be proved right in the end? History shows otherwise, but we'll see what happens in the upturn. Still, as I was saying yesterday, his overall satisfaction rating is very low, and your average American is still feeling the pressure of higher prices. He bangs on about the price of gasoline come down, which it has, but generally it's come down in the global markets. And the price of eggs, which were ridiculously high as he took office in January. But, people can't survive just on eggs alone. And I'm sure, he doesn't eat that many himself. But anyway, dollar under pressure still. Elsewhere, crypto continues to be pressured. Particularly the biggest one of them all, Bitcoin. And as we said yesterday, again, 85 has been tested 1, 2, 3, 4 yesterday. And again this morning, we've tanked up. We're approaching 88, but as you can see, it's still weak. It's still under a flatlining 20-day moving average. We're still in a bit like we saw with the Swiss franc earlier. we're still in a bit of a zone here. The top of the Bollinger Bands there at shy of the key, 95,000. The key for me, as we've said for many times, is 92, which is here. Obviously, we've got that on there. And then we've got this flat support at 85. But again, whether it's next week or going forward, don't rule out 80.50 from this intraday spike at the end of November. And then that brings in major support from earlier in the year at 75,000. So we're still biased to the downside for crypto and for Bitcoin in particular. But anything can happen. And I'm not going to speculate anyway with regard to Bitcoin, but technically that's in a channel. And I'd wait to see a break of that channel significantly. So some buyers this week at 85, but we haven't been, as you can see, we haven't been, and sellers at the top of the at the 20-day moving average at 89.70. So will that happen again today and over the weekend? Let's have a look what that looks like on Monday. So crypto still under pressure, a bit like the dollar. Oil did recover, obviously on the saber rattling against Venezuela. We talked about that plenty this week, but we did go into $55 on Tuesday. Recovered Wednesday, down Thursday, and we've bounced a bit today. Still, that was I suppose that negative candle still engulfed by the uptick on Wednesday. We're at 56.60. I won't bore you with the trades we missed. We got, I said earlier in the week, we got stop loss too close, but that is still weak. We are looking with this crossing. What's this particular strategy? The Bollinger Band and the stochastics on a daily basis. It still hasn't crossed, so it's still not a buy on this strategy. It's just about oversold. We've had some big candles this week. We've benefited from it on the downside. We only took a little bit out of that move. We should have had more, but should have, would have, could have. $55 is the downside. Really, the upside is all the way back there at 58.20, the 20-day moving average. So again, let's do the same thing we did with everything else for next week. The first resistance is here to the upside. The lower we got out at 57. 57.30. So 57 needs to be recovered if we're going to start to move up, which is this cluster low we had here at the middle of October. Then is the 20-day moving average, which takes us to 58 plus. And then obviously we could eye 60, but obviously the big level many are eyeing is still $55 next week. But this looks like we may be turning around. If we look at a trending strategy for the oil market, it's still down. 5 and the 9 and the 21. This is the 21, the 9 and the 5-day moving average, and we've just got into the 5-day. Went back under the 5-day yesterday and got back to the 5-day at the moment at 56. So the trend is still very much set to the downside, and it has been, as we've been saying for a while, really most of the year, certainly the second half of the year, to the downside, as as we've seen that collapse in the yen, some of the time frame collapse in the oil price or downgrade in the oil price. Forex indices. Let's just look at them all, not just the American ones. We had there was a bounce yesterday. Yeah, we had a bounce yesterday after the big sell-off on Wednesday. Cash markets, Nasdaq was up 1.38% last night. Micron, I'm not the big significant chip makers, was positive yesterday, but as you can see, we're still under the 20-day moving average at 25,225 here on the Nasdaq. Big down day on Wednesday. So bought back yesterday and bought back today. So we're back to where we were around about Tuesday, around about this another key fib level of this move down. So this is the 50% level of this leg down here from the top in October to the low in the middle of at the end of November. Then we've had a move up, and then we've next leg down. That leg up, it looks as over, and so we moved down into the 30, the first key fib level earlier this week. We breached the 50 and we tested the 61 area. You can see that's 61, 24,600. And then we've come back. So we need to break back over this 38 level and then the 20-day moving average. So next week or this week, again, I'm going to paint some numbers for the NASDAQ. We need to get above where we are at the moment, 25,000. Then there's the 20-day moving average for me at 25, whatever that is, 25,250. And then that next fib level of this leg down takes us above there at 25,350. And then obviously the top through here, 25,700, 25,800 range is the upside levels. To the downside, obviously the lows, I've got to stop saying obviously, 24,700 is where we found buyers this week. And that coincides with the that fib level of this leg, the current leg we're on, takes us to 24,600. So that's perhaps more significant, 24,600. Probably got too much data on there. We've got a glitch. Let's close some of these feeds at the moment. Let's get rid of that. Keep everything sweet as possible. So that's NASDAQ, similar setups, although there's been a bit of divergence here. Let's go to the Dow. So that's the NASDAQ, particularly being driven by the Oracle news this week in particular, that Micron stock chip maker was up 16% on open. Yes, it closed up 10%, 10.21%. Micron traders, investors returned yesterday. So the NASDAQ was up 1.38%. The Dow, much more of a muted move, 0.4 of 1%, 0.14 of 1%, but it's not moved down as aggressively as its peers. But again, you could say that that was a down leg, wasn't it? So that's the whoops. Oh, I've done that before. That's the down leg. I'm going to put an up leg on here. So the up leg, if this is over from the floor, so that was the down. This is the up leg and the retracement there on the Dow. So again, it's got to its first fib level, which many don't play with, the 23.6, and the whoops. Move that over. And the next support is the 20-day, which we've been to test yesterday and again this morning, interestingly. So that's the key support going next week where we are. It's 47,780, this zone here, and the first major fib level 2 for fib traders is this zone here. So that's a major. It's decided to draw that rather than mark, and let's push that. So that's that level there is our support level for the immediate support level for the Dow. And this is another good example of when I talk about consolidating or coinciding fib levels. Obviously, we've had a similar leg, so you would get that. But this is if you can see all that, that's the 68. That's the key to the down leg, the 68. And this is the 50% level of this move up. So this is a big fat support zone there for the Dow. So that's the downside targets for the Dow going into I'm saying next week, but going into year end as well. Upside, we'd like to break this first fib level, certainly. And if the 20-day holds, that could certainly get hit quite quickly. And then obviously the previous high from the previous leg is there. And then the high from a couple of weeks ago is there. So they're the upside targets. They're the downside targets for the Dow into year end, basically. Let's see how that goes. The S&P 500, the most important of all the stock markets in the world. Yesterday, I say, was up 0.79 of 1%. So not as good as the NASDAQ and not as bad as the Dow. 6,774 we closed yesterday, and cash, you can see the derivative futures is currently trading 6,778 at the moment. So a similar move there. We've already put those patterns on. So it's through. But the key thing is it's gone through its 20-day moving average. So again, next week, if we're going to, yeah, there we are. It is that immediate level there, the 20-day moving average, that coincides with the minor fib level there at 6,800, but it's that zone. So 6,800 is the key level you'd be looking for on the S&P. The support is that 50% level at 6,700. We talked about all this yesterday, didn't we? And then the big support all the way down here at 6,500 on the way down is the key fib going into next year at 6,650. So they're the levels for next week and going into the new year, and then obviously all-time highs through 6,900 again. To the upside for the S&P. So again, big down day Tuesday and Wednesday was the big down day. Tuesday, Monday, Friday, 4 days of downs. A retrace yesterday, but again, see how the zoom that in. See how the spike following the inflation data, the CPI data was sold off. We did finish positively for the day, as I said, and we're up again today. But obviously, we need to break the 20-day moving average in this zone here, the 6,800 zone, if we're going to go higher for the S&P. A break under a 6,700 could easily move us to 6,650 quickly. A bit more of an extended decline to 6,500. But what I say, watch those zones going into next week. And metals, what can we say? Well, we've got skin in the game on the gold market. Again, there we go. On there's different, very strong trend. Support, and we haven't been back yet to test the 9. So earlier last week, we were into the 9 period. The 5 period has been tested, but you can see the 5 period was last closed below the 8th of December. But, the 9 hasn't, and the 21 certainly we haven't touched that since the 24th of November. So it's been a significant run. We just haven't had the muscle to close at new all-time highs this week, have we? We've tested it once, twice, 3, 4, 5, 6 times. So it looks like we may be running out of steam. Look, last time it was a very, very strong, steep rally, big-bodied candles as we went to this all-time high. We then sold off really aggressively on the 21st of October. That it was a Friday, wasn't it, if I remember rightly? No, it's the Monday, wasn't it, following the Friday's final rally? And so we haven't yet closed back at that level. See, that's key. Both psychologically and technically, we haven't closed back at those levels from the 20th and the 21st. Sorry, the 20th. And I thought it was a Friday, wasn't it? The 21st, I remember right. Is that right? No, it's a Monday. I thought it was the 17th. Monday was Friday was the Friday was the 17th, wasn't it? And then that's right, it was the 6th Thursday. Friday was the dear God, the top. Hang on a minute. 16, 17, 20. That was the Monday, wasn't it? Monday was the top. Tuesday was the sell-off. That's right. Remember, Tuesday, my mantra, Tuesdays and Fridays can be quite volatile historically, and that's what I remember saying at the time. It was another Tuesday major sell-off, and it continued to decline quite rapidly, but we came back, we've come back, and we come back nicely. Major sell-off, but rappelling the demand for gold. So all-time high still, and our stop loss, as we know, from our other chart, we just go to a different thing. Our stochastics chart is here at 4,309. We've been tested today, but it's not been breached thus far today. And we trade at 4,333, so up again in this hour as US stock markets are about to open. So gold's up, stocks are up to close the week. Sorry, let's be consistent. Let's go to the daily time frame for gold. Big support is our entry from this week, which is the 20-day moving average there at 4,220 basically. Well, 12,200. is the low, but we could be as high as 4,225. Call it a round number, and obviously the target really is within smidge. That level. Sorry, that we've been to this week. So just but tighter support is a bit below where our stop loss is now, so we could easily get taken out at 4,300. So let me just put that on as a line. 4300, delete. There we go. So 4,300 is support this week and next week, and that's immediate support level. But again, if that's breached, it could get breached quite significantly. But we're still $9 north, and let's get rid of that. Doesn't make looks a bit naughty, doesn't it? You know what I'm talking about. We're talking about these. This is the key, which is basically 4,350 is what really the market is looking to. The bulls are really trying to take it over 4,350, with 4,300 being the immediate support next week. Okay, so it's around about that 4,350 area. That's what we're looking to do. And you see, we're still looping higher, but running out of steam. Potentially small bodied candles, so maybe due for a consolidation around about 4,350. But don't be surprised if it comes back down to here to 4,200 as well, and 4,000 here. As we say, we're now 10 weeks. We've got the weekly candle. We're now 10 weeks over $4,000. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks. Our 11th week, in fact, over $4,000 for gold. So you can see, the weekly. I'd say that was consolidating, but last week's took us through the top of the previous level, and so over 4,300 this week. For all of the week, potentially there's that 4,300 level. So again, more bid. So again, we might see some profit taking next week and into the year end. But until then, stay positive, and watch your stop loss. I might have mine too short, but it's just on a daily basis. We'll see what happens for the rest of the day. So gold remains bid. Silver even more so. $66, new all-time high this week. And we've held more or less that range, 65, 75 at the moment. Copper is the same. I haven't got copper on here, but copper, silver, very, very well bid, as well as gold. So if there's no questions, guys, I'm going to wrap this up, go and get some lunch. Vidak, hello, Vidak. How are you doing? How's your week gone? Hope you've been positive. We've had 2 losing weeks in a row, which is I haven't been paying much attention to. I'm paying perhaps as much attention as I should have been the first 2 weeks, but we're bounced back this week. We're currently, as of last night, we were up 1,742 pips or points, thanks to the Nikkei in particular. Obviously, the index is skew it somewhat, but the Nasdaq was a 2.5% gain. Nikkei was a 0.75% gain. Some big. That was negative. Anyway, I'll update all the numbers properly over the weekend. We did take a trade last night. We were short Euro CAD. So those that are open, we are still long gold, and I'll finish with these 2 forex trades that are open. We've got a Euro CAD from last night, which I didn't check this morning. Euro CAD. Can't remember what we were doing. We were, we were short. So we've been in the money and then out of the money. I probably should have. So look what's happened. Oh, absolutely nothing. Where did we get filled? It was last night, 10 around about here. So we got filled at 161.51. We've been out of the money, and we're out of the money again. We haven't actually been in the money, have we? No, because we got in here. That's not happening, is it? I can't remember whether it's a short-term one or a high-term one. Again, I might just close that out um, just for sort of administration point of view. To be honest, it's not a massive mover. Euro CAD, as you can see here, it's but messy, choppy. That's the hourly range. Look at the daily range. I'm not sure why that triggered. Because it was buy. So I'd see why it did trigger yesterday. Because of the big down candle we had yesterday. So but we'll see what that looks like at the end of the day. But that's nothing to get too excited. And the other one that was going sideways, which had been open for too long, that was still open, was the Kiwi against the Swiss franc, and that shouldn't have. It may have been influenced by the move in the yen, actually, this one, but I moved the stop loss, didn't I, last night? Or this morning, in fact, wasn't it? The stop loss was moved this morning here to where's it gone? 15.45.91, having touched it overnight. So I moved that this morning. It wasn't then. I'd moved it this when I saw this morning. It's moved down, so I might move this down now to the target level we'd got to. Actually, I might get a bit more aggressive on that. There's the 4 hour. I might actually bring that down to. So stop loss is below our target now as well. So we've moved down last 4 hours quite significantly. So that's running, isn't it? That's off and running now. That's broken down. Let's have a look at the daily. We've had this for a long time, so patience has paid out on that one. We got short this from the 11th. Breached in that. So there's only some more legs in this. So I'm going to leave that. Perhaps reassign not get too. See some big up. So there could be some more momentum to this to the downside. Swiss franc. We saw the Swissy moving against the dollar today as well. So might move that stop loss, not get too aggressive with it, but certainly it's been a negative day. So bring it to the 20 hour. There we are. Maybe some of that might come back this afternoon, but there we are. So the stop loss now is 50. Well, it's not 50, 45.7. I'll move that on my 45.7. Call it 78 for a round, and we'll go backwards a bit. I'll call it 79. So 45.79 now, the stop loss on the Kiwi CAD, and I'll change that on the trading platform as well. So there we go. So I've been here far too long now, so I'm going to wrap this up. So they're the two open positions. Sorry, the three open positions. I'm long gold going into the week. Let's probably keep these into the week, and we'll see. And have a look at what's triggered on the back of the Bank of Japan tonight. So my trading platform, which is not actually, I've got a cut down version of it running here on this workstation. See what might be triggering for tonight. There's Aussie, Kiwi, CAD yen, Euro CAD, Euro yen, dollar yen, and pound yen. This is obviously all based on the yen move. We'll see what that looks like once we've closed the day out. And the more aggressive, Aussie yen also, again, Euro yen again. DAX, interestingly. DAX, what's the DAX telling us for today? DAX potentially long today. It was short earlier in the week. Did a move, but then it's that Tuesday, Wednesday down, and Thursday bought it back. So potentially, I'll look at that tonight. I'll let you know. Kiwi yen, so all the yen crosses. So it's Kiwi, Aussie, Euro on the more aggressive strategy. The standard end of day strategy, CAD yen, Euro yen, dollar yen. So it's all the yen ones. I'll have a look at that. Don't want too much exposure to one currency, but and see where we finish. So I'll update that either tonight or over the weekend. What, if anything, I take any positions tonight into the close of the final, as I keep saying this whole week, the final full trading day week of the year. I'll see you Monday. Later on, we'll do live trading for the US Open, is what I'm planning to do on Monday. If there's no questions, I'm going to wrap this up. I'm going to get some lunch. So take care, everyone. Be safe. Have a great weekend. And I'll see you Monday. And as ever, may the pips be with you all. Bye-bye.